Welcome guys to the new video today here on my channel, and today I wanted to elaborate on my trades this week, or I should say the trade on this week. I only entered this trade and it was a total gain of 6%, and I wanted to elaborate on this short on Polygon. So let's clean this up. And basically, I'm looking at the higher time frame context that is building lower highs and lower lows. And here I'm looking at this overall higher time frame range that could be accumulating at discount. So basically we are at all-time lows on this chart. And yeah, and if I'm looking at an accumulation, I always like to look at the second tap and potential second tap point of interests. And if we go on a higher time frame, we can see this nice buy to sell here. So sell to buy, and then the break, and basically here we have a nice demand block, and we can go on the lower time frame and check how this looks. And basically we've got here the overlapping thing going on, so this could be a nice point of interest. If price don't respect this, I will expect a model 1, but as for now, I'm monitoring this point of interest here. Let me set an alert. Yeah, and if you know the range theories, you know that to get from here to here, we need some sort of a distribution. This does not mean that we always can trade it, but here we see high, low, higher high, lower high. And here we are entering a nice range. You can see this, that we actually have some time displacement here and some sideways price movement. And here I always like to look on the left side if there's anything that we can look at. And we can see that we had an aggressive push down here, and this is a very nice order block here. And if we zoom in, we maybe can refine it more down, because I always like it more when an order block is backed from a structure perspective. And here we have a nice structure, so I will repull it like this, and maybe we can refine it even more down to, yeah, let's see. And here we are in this structure block. We can see and then break it back to bearish, and here you can see a nice block, and you could even refine it down till here. So we can look at the overlapping thing, and you can see that we went down, but there's no structure because there's no 6 candle rule. And here we got it on the 2-minute, so we can refine it down to this here. So basically we even can refine it down here. It's a sell to buy, and then we continue with the lower lows. Now let's pull it to the right. Okay. And now we can see we mitigated the first supply here on the first tab, even the more refined supply, and here we have the more refined supply from the upper section, and here we entered on this nice local distribution with our 1, our 2, and at this time you don't know if this is your second tab, because it always can go for model 1. Even I was not expecting it, because we took out the extremes and on the left there wasn't any supply blocks, so it's highly unlikely that we take out this high and then go down. But I always map out the model 2 point of interest, and if we don't respect it, it can always go for model 1. This is always an opportunity. So sometimes you take an L for an W, but here I looked at this 5-minute structure supply and it got mitigated here, but I highlight the unmitigated part here with the dotted line. And if you're in a live trading environment, you can see there is no real demand down here. Oh, well, here we can map this out, but if we get our high quality breakout structure, you can enter and look how the reaction is from this supply, but this supply isn't backed by an accumulation, it's just there because of the sell to buy. So yeah, we can keep it here, and now we can play the bars. So what I really liked is that the slightly more aggressive move up, but we smashed through the supply, and here you can see on the lower time frame this is all mitigated. I don't think that I was highlighting what I think I highlighted this down here, but on the way there it's already mitigated. But yeah, here you see that we created demand coming up. So for an entry, I would like to mitigate it, go up, and then break structure, so the demand is out of the way. Wait, let me slow this down. So here happened what I wanted to see, a mitigation. We got the reaction away, and here you always look the highest time frame where this is valid on, and here you can see the nice structured move. So we went up, mitigated the created supply, and then we broke structure right here. And I always like to wait for the candle closure, so I already calculated the position and I entered right around here. Like here, I think it was like 3-5 here. And this is a very clean breakout structure. Why? Because it was even the first hour of New York, so I like it when New York opens and the whole New York first hour. So New York opens right around here at 3:30 p.m. here, and the first hour is likely a manipulative hour, and if we break structure exactly after the first hour finished, it's very high probability for the break. So it has to be the break on after the manipulated hour. So here you can see, and here the hour ended, and then like 20 minutes later we got the break. I really liked that, so I entered and we created supply. Let me clean this up. So we created supply here, a 5-minute structure supply that is a protection for my stop loss. So every move up with a break here is an opportunity to de-risk or to add, but I didn't want to add because at this moment we can look at Bitcoin. Bitcoin actually just moved sideways. It was very nothing special, and sometimes when Bitcoin is ranging like that and is doing nothing, this should not hinder you to take a trade, because sometimes it's like Paul here, it did his own thing, and yeah, it's in the end it's a probability game, so you don't know what will happen until it happens. So yeah, basically this was a trade. I like to front run my TP, and it was around a 6 RR trade, and here you can see how the trade played out. And what I really liked, I think I mapped out this, yeah, and we got the reaction. And in this moment, you always have to think, in this moment you entered here, and legit like an hour later you get the notification, because I put an alert right around that supply. And if you see this, you always have to ask yourself, which emotion will you have when this happens? Now I don't have any emotions. When I see this can wig me out, and that's it. I'm out of the trade. I won't enter again on a Model 2. I would expect a Model 1. But if it rejects, it's an opportunity to de-risk. And in my mind, I'm gaining here, because if I risk a K, 1K here, and now I can trade my SL down to here, I made $500 because I de-risk in my mind. If I risk the money, it's gone. That's why a de-risking opportunity is always nice, and sometimes it's an extreme supply mitigation for the continuation. And here we had a very aggressive buy to sell, and it had a nice follow through. Here I waited for the break here, and and here I did not trail my SL immediately, because on these pairs sometimes it goes up, takes it one more, and then goes down. That's why I did not trail my SL here, but it was like a mental SL, means if price would have went up here and I see the candle closes, I will exit manually. But this was my mental stop loss around here, but it was not needed. We had a slight consolidation, which is normal around the EQ, and then after hours, and I think Asia completed the model here. Asia opens around 2 in my time. Yeah, and here you can see we had so much buy side liquidity, and this could have been an accumulation to grab more liquidity, then went down, but it just decided to straight go down. It smashed through my TP. It was a very nice trade, so I entered, managed accordingly, and before I went to bed I put my SL here because I was not willing to lose the whole percent when I can de-risk 0.5% of the trade. And I took full take profit here, no need to leave a runner for me personally. And yeah, I could have tried to run it like this, so maybe take half, so realize 3 RR and maybe gain an extra 7 RR. But I just wanted to get the 6% and be done for the week. So my weekly goal or my monthly goal is 10%. With gold last week, I had like 3.65%. Here I have like 6%. So nearly done for April. Maybe I get one more trade and I have my 10% for the month. Sorry. And basically this is the accumulation for potentially the higher time frame we had the distribution for the higher time frame potential accumulation, and I know this can be contradicting because I'm expecting Bitcoin to go down, but this can do its own thing. So maybe we go down and we go up in an aggressive manner to grab liquidity and then sell off again. We had that on Solana when we had here a very, very ugly, and I did not trade that, but we had here the accumulation. Bitcoin here was distributing, building sell side liquidity, and you see we had an accumulation, we went up, but it was very slow creating buy side liquidity, sell side liquidity. We grabbed the highs and went down. So and even we had a kind of a model 1 going on here. 1, 2, 3, and then sell off. So often you see something like this, that if we have an accumulation that is counter context, we get the completion to grab liquidity and go down. So I'm expecting something like this here on Pol, but we will see. This was a trade for this week, 6%, a quick buck. And yeah, stay sharp, stay grateful, and yeah, I will release an update, a market update. Yeah, so stay sharp, and if you want me to do TA on some coins, just leave a comment, leave a like, and see you the next time. Bye.